Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now, to the show at hand.
Hi there, Yoni Schmidt here, hosting today's episode of the Same Day Podcast, where I connect with top business leaders, entrepreneurs, business owners, and more. Past guests include Chris Prefontaine, Greg Shipman, David Yoon, and many, many more. Today's episode is brought to you by Keyrenter Property Management. At Keyrenter Property Management, we are a full-service property management company that is helping clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of property management. Go to KeyrenterPMC.com or email us at info@KeyrenterPMC.com for more information. Today's guest is Michael Barbarita, founder of Next Step CFO, entrepreneur, investor, and fractional CFO with more than 40 years of experience building, scaling, buying, and operating businesses. He's lived both sides of entrepreneurship, growing a retail company from $2.5 million to $8 million in annual revenue, helping structure major business acquisitions, and experiencing the painful reality of closing a company after business failure. Those experiences inspired him to launch Next Step CFO, where he now helps business owners build more profitable companies through strategic financial planning, cash flow forecasting, and disciplined decision making. Today, we're going to talk about what separates businesses that merely survive from those that thrive, why cash flow, not revenue, is the lifeblood of every company, and how entrepreneurs can make better financial decisions before small problems become expensive ones. Welcome to the show, Michael, and thank you for being here.
Thank you, Yoni. Thanks for having me. Appreciate it.
Of course. Okay, let's dig right in. Let's kind of get into your story. Your story is unusual because you've experienced incredible success and devastating failure. And you're also open about it, which many people aren't. Looking back today, what did those two experiences teach you that no business school ever could?
One thing. So, I had success and then failure. So it's like I had success and then I took stupid pills and I had failure. And and so the one thing is that the one thing that separated my success from my failure is doing what my competition was doing. That was the failure. Mm-hmm. Doing what my competition wasn't doing was the success. And that's why we help business owners with business and financial strategies that their competition isn't doing. Because that's my story. I did what my competition wasn't doing in my successful ventures. My unsuccessful one, I did exactly what my competition was doing. And 95% of small business strategies used today are identical to your competitors. They don't work.
Yeah. Interesting. That's what my professor of management at the Price University of Business at the University of Oklahoma, Dr. Anderson, would say, you're either differentiating or you're achieving some sort of a comparative parity, right? Just doing exactly whatever your competitor is doing. So that's interesting. Thanks for sharing that. You named your company Next Step CFO because of what happened after one of your business failed. Is that correct?
Right.
Can you tell us a little bit about that story?
Sure. So, like I said, I must have taken stupid pills or something because I did exactly what my competition was doing, where, it was a medical facility that I had started. And it was a unique medical facility, but I had a lot of services that a lot of other competitors had. And I just handled it the same way. I visited doctors. I gave chocolate cakes to the front office like everybody else did to the front office staff to bribe them to see the doctors. And it was not really the way to go. The way I should have marketed that business was direct to the consumer. That was my biggest mistake. And none of my competitors were marketing that way. They were all marketing through doctors. Mm-hmm. So I learned a great lesson. And I fell on my face. And what I say is that the hardest step to take after you fall on your face is the step after the fall, the next step. And so Next Step CFO was born at that point.
Got it.
Yeah.
Yeah, interesting. Well, I've been there. Mine was a little different. I didn't achieve success and then failure. I just went straight into failure. So I was fresh out of college and I thought I knew something, but truth is I didn't know much. And I lost a little bit of money, but I was young and bounced right back. So for those out there who I think fail, it's an important lesson. Just yeah, think about the next step because you shouldn't dwell in the past and look into what happened. Just focus on the future and how can you learn from the mistakes that you've made. Uh,
Right. Right.
let's talk a little bit about cash flow. You talk a lot about cash flow, right? Business owners often obsess over revenue, and your focus has always been on cash flow. Why is it that cash flow is the number every entrepreneur should lose sleep over instead of top line sales?
Right. Well, because you cannot, I don't know if anybody's ever tried to operate without cash, but it's really, really difficult.
Yeah.
Um, you know, Operating without revenue is difficult too, but most companies that or most businesses out there, can generate revenue. I'm not saying they generate it enough, but they can generate revenue, but it's the cash that they can't seem to get a handle on. And there's a variety of reasons. Cash has hiding places. Revenue does too, but
Hmm.
cash has hiding places. Um, you know, Receivables is certainly a big place. Inventory is a place where people never look if they have inventory. Um, that is a that what that is the most hidden that
Hmm.
cash is because business owners don't understand that their inventory is basically a bank account, and but that they have to make liquid in order for it to have any value. So inventory is a big thing. Prepaid expenses. Sometimes people pay for trade shows and those types of things that are happening in the future. Insurance, things that are happening or being incurred in the
Hmm.
future. Capital expenditures, another area. Sometimes also the business owner takes too much in salary uh, that pretty much abuses the company with withdrawals and so forth. Set high salary,
Hmm.
um, where they don't really know how much they can take. You know, that's one of the biggest questions I answer for business owners with incredible accuracy is the can I afford it question. Can I afford a raise? Can I afford a new truck? Can I afford a new location? Can I afford a manager? Can I afford a new
Hmm.
employee? All these questions I can answer with a business and cash flow forecast, which is one of the things that I do for business owners. And that's one of the main reasons why I do it, because it answers that can I afford question. They don't know what they can afford. And sometimes even when, they might have taken out too much salary, they didn't know it. They didn't know it. They don't know it. They don't know that that's the problem. And that's why they need someone like us.
Yeah, that's great. You already answered my next question, which was to ask about, the rolling cash flow forecast, you deeming it as the centerpiece of every successful business strategy. So
Right.
I'll move on to the next one. But what is the biggest cash flow mistake that you see otherwise successful business owners making?
I think the biggest cash flow mistake is number one, not knowing what your current cash balance is on a daily basis. Number one. Number two is inventory, without a
Hmm.
doubt. Now, service businesses like businesses in the trades, they don't have inventory, so they don't have to worry about it. But usually, their biggest problem is receivables and how to manage deposits. How to really manage the deposits and the cash cycle that they have, because they have jobs that could last for a long time. And so
Hmm.
you really have to understand your cash flow if you're going to, take on a job, maybe take a lower deposit. You shouldn't, but if you do, you should understand the ramifications of that, the cash ramifications of that.
Hmm. Thank you for that. I want to talk a little bit about scaling businesses. You grew
Yep,
Ski Town USA from 2.5 million to 8 million in less than 5 years. Tell us about the biggest decisions that unlocked that growth.
absolutely. So there were a couple. Um, you know, One of the things that we've always helped business owners with is how to make compelling offers. And two of the compelling offers that we made, and I'll quickly go through the five components of a compelling offer. It's scarcity, urgency, risk reversal, which I'll get to deeper, adding more value to your product or service, um, packaging and bundling products and services together, and then being indifferent to the outcome, being disconnected to the outcome. So those five things are very powerful ways to make a compelling offer. So the reason why I say compelling offers was the impetus of our growth is because we had two very compelling offers. Number one, the problem the customer had in the ski retail industry was that they really never knew if the ski they were being sold was the right ski for them until they got up in the mountain and tried it out. But the problems retailers had was, once a ski gets skied on, it depreciates dramatically.
Right.
So what we did is we implemented what we call the ski guarantee. Ski the ski 3 times, you don't like it, bring it back for a brand new pair. Now, my employees thought I was out of my mind because they knew if the ski depreciated immediately, and they had visions of thousands of pair of skis coming back and them having to do a lot of work and us losing a lot of money. But I had a little different opinion. My opinion is that all the customer really wanted was a great ski experience, because for a skier, nothing ruins their day more than bad skis, boots that hurt, bindings that are loose, skis that aren't tuned. It just ruins the day. It's a pathetic thing, So,
I've been there.
So that's it. But that's all they wanted was a great ski experience. They didn't want to put one over on the retailer. We sold 8,000 pair of skis the first year we implemented, a 25% increase from the year before, and only 8 came back. Next year, 11,000 pair, 14 came back. The point being is that the skier wasn't just wanted that. All they wanted was a great ski experience. Why can't we supply that for them?
Yeah.
So that was one of the real important ones. Another one was, remember I told you a little earlier that another compelling, that was a risk reversal. Another compelling offer is packaging and bundling products and services together. So one of the things that we did that our competitors never copied was packaging clothing. And let me explain why and how we did that. So every ski business, every ski retailer packaged skis, bindings, and poles. Everyone, like everyone. What we did is we took the most popular ski graphics. We went to the clothing department and packaged up matching hat, parka, pant, and sweater, and sold that as a package. And they flew out the door. And our competitors, the competitors never did it. They didn't think that it was important to package clothing. And so we did, and it was incredibly successful. And they never copied it. They never copied the risk reversal either, which was incredible because, people would go over to my competitors and say, well, do you have a ski guarantee like Ski Town? And, no, we don't have that. And they never copied it, which incredible. So it was just I think those two things for sure come to mind as part of the impetus for the growth of the business. We did a lot of things another thing that our competition wasn't doing is, and this is important for people to understand, that suppliers of your goods and services, you give them a lot of money. And so what we did with our suppliers, they had the co-op advertising program, which was 2% of essentially 1 to 2% of our purchases. But we went back and asked for more money. We used to get $10,000 from each vendor to participate in a direct mail campaign where every week we would feature that particular vendor in a campaign. And we did a dog and pony show. Now this was above and beyond their 1 or 2%, because what people don't understand is that these suppliers, they have advertising budgets for this purpose, but nobody asks. But nobody asks for it.
Yeah.
And so you've got to ask for advertising money. You can't just accept the 1 or 2% you might get in co-op.
Yeah. Wonderful. That's a great point. Those are all great points, really. Um, my next question is, if a business owner is trying to grow from 1 million to 5 million
Yeah.
in revenue, what usually has to change in the owner's mindset?
Well, first of all, they have to be action takers. Okay. The ability to take action is a skill in business that's very, very valuable. You have to be able to do that.
Hmm.
You have to be decisive, and you have to be able to accept change and understand. Here's what you have to understand. You have to understand that if you're going to take your business to the next level, something has to change. You can't do what you've been doing. Something because business evolves.
Hmm.
And that's I think this from your experience is that you know when you have one employee, it's so much different when you have two, and then four, and then eight, and then 10. Things change. Your business evolves.
Yeah.
Um, and so the ability to adapt to change is a critical skill in the scaling process.
Yeah.
And then, in my opinion, it comes down to implementing business strategy that your competition isn't. And we have a number of strategies that we help business owners implement that their competition isn't doing.
Yeah.
One of them is risk reversal. I mean, your competition might be offering some kind of satisfaction guarantee, but that's nonsense. We notice we had a specific guarantee. You know,
Right.
it's a ski guarantee. Ski the ski 3 times. You don't like it, bring it back for a brand new pair. That's not customer satisfaction guarantee.
Tangible. Yeah.
Right. That's a direct, tangible benefit. Remember, I
Yeah.
started out by saying the problem the customer had was they really didn't know if the ski they were being sold by some hotshot ski salesperson, by the way, that would
Right.
flex the ski in their face, was the right ski for them until they got it up in the mountain.
Yeah.
So that was so that risk reversal solved a problem.
Right. Right. Which was the ambiguity basically that customers were experiencing when they were coming into the store
Right.
to purchase, a pretty expensive set of,
Oh yeah.
skis and very
Oh yeah.
expensive equipment. So,
Very.
let's talk a little bit about fractional CFO.
Okay.
At what point does a business truly need a fractional CFO instead of just a good bookkeeper or a CPA?
Well, I've started with clients at startup, but I also have more generally $500,000 in revenue
Hmm.
is usually a trigger point because the CFO offers, we're not historians. Bookkeepers and CPAs, they have a tendency to look at historical and be historians about things. We look
Hmm.
for we look at the data, the past data, but we also, uh, you know, where is this business heading? Is the big question that business owners have. Where am I heading? Where am I going? And that's forward looking. And so,
Yeah.
that I think is one of the key things that a CFO does uh, that not any other profession does do. And that's why the forecasting is so important because we can help with forward looking analysis, both strategy as well as cash flow and profit.
Yeah. And are those the first three numbers that you look at when you start working with a new client, or what are those numbers?
What we, they're basically there's basically five numbers that should be in every business owner's mind. And the reason why I say that is I try to simplify it for the business owner. They're not accountants. They're not,
Hmm.
they don't really know how to read financials. They don't even like it, by the way. As a matter of fact, they pretty much repel it. Um, but you really should understand what your sales are on a weekly basis. You should understand what your gross profit on those sales are, your gross profit percent, your net profit, once again, on a weekly basis, and your current
Hmm.
cash balance, which we talked about earlier, knowing that on a daily basis.
Hmm.
Understand, if you have those five numbers down, then you're going to be able to make about 70 to 80% better business decisions, more accurate business decisions with the knowledge of those five numbers. I call it the vital five.
The vital five. Let's just recap them. Daily cash balances,
Right. So
um,
sales,
sales. Yeah.
okay. Gross profit on those sales, the dollars,
Yeah.
the gross profit percent, on those
Okay.
sales. Okay.
Yeah.
The net profit for that week and
Yeah.
and you already said the current cash balance on a daily basis.
On a daily basis. Yeah. Nice. Thank you for recapping and sharing that. All those, like you say, it contribute to a business owner being able to make, 70, 80% better business decisions that ultimately also lead to profitability, right? Um,
Profitability and yes, that absolutely. And you have to know these numbers to scale.
yeah.
I
And you
mean,
talk about making small incremental improvements that, compound into significant
right,
profit growth, right? Which
right,
I'm
yeah.
guessing all tie back to these five numbers. Can you give us
Well, no, they do,
examples?
but they also apply to my 80/20 rule in regards to business. And let me quickly explain that. Okay.
Yeah.
They do tie back to these five numbers, but it only covers a couple of areas of what I consider to be the 7-step pathway to profit. Okay. And these 7 areas, well, the way I look at the 80/20 rule in business, most people say 80%. By the way, you're never wrong about the 80/20 rule. No one's ever wrong. But
Yeah.
but most people look at the 80/20 rule as it applies to business and say 80% of my business comes from 20% of your customers. And it does, potentially. Probably.
Hmm.
It's the law of averages with the Pareto principle. But what I do, the way I look at the 80/20 rule is that 80% of your revenue is driven by 20% of what you do every day. And that 20% are these 7 steps that I call the 7-step pathway to profit formula. That's the
Hmm.
basis for all the strategies, including the one, the Vital Five, but basis for all the strategies that we help business owners implement. And so the first step in the 7-step pathway to profit formula is leads, not just any lead, but a good
Hmm.
quality, high quality lead. Second,
Hmm.
conversions. What's your conversion percentage? Meaning, how many people do you convert into your sales process, whatever that is? Then of course, closing rates. Then how many of those people do you close? Keeping track of that, focusing on improving that, focusing on
Hmm.
improving your number of leads, focusing on improving your conversion, focusing on improving your closing rates. Then the fourth step is client retention, an area that's often overlooked.
Right.
How do I continue to keep my current client base? How do I keep
Hmm.
them happy? What do I give them for perks, whatever, how do I keep them happy and retained? The fifth step is the average dollar per sale. How do I increase the average dollar per sale for each customer? And then how do I increase the frequency of sales to that
Hmm.
customer? And then finally, we have to control our costs. So it's leads, conversions, closing rates, client retention, average dollar per sale, frequency of sale, and controlling costs is the 7th step. If you focus on those 7 steps, that which should only account to 20% of what you do every day, it'll drive
Hmm.
80% of your revenue. And
Yeah.
and what I talk about, what you were talking about earlier, is how with little tweaks, this is not major things, with little tweaks in each of these 7 areas, they compound on each other. So a 10% increase in each of these areas usually represents a 36% increase in sales and a 56% increase in profit.
Wow. Yeah. I'm down to try this on some of our businesses. So I appreciate that. I'd like to talk about competitive advantage. One of your favorite topics is building a position of market dominance, right?
Right,
Tell
right.
us, what does that mean, and how can small businesses compete against, much larger competitors?
Okay. Do you remember my ski business story and the ski guarantee?
Yeah.
And you remember how I started out? I said the problem the customer had,
Hmm.
okay, was, okay, and then I filled in the rest. Well, that is what a position of market dominance is. It's actually 2 things, and it's the first 2 steps of what we call the conversion formula. The conversion formula is a formula, an actual formula, 4-step
Hmm.
process to convert prospects into sales.
Hmm.
Okay, and here it is. It's 4 steps. And by the way, it's based on the premise that the way to get into the mind of a prospect is to, number one, identify the problem they have they don't want and the solution they want they can't find. That's a
Hmm.
position of market dominance. So So let's go through this 4 steps. Captivate, which is the problem the customer has and doesn't want. Usually the problem is in the industry. It's an industry perception. For example, in the trades, one of the perceptions that the trades has is nobody ever calls them back, or they don't show up on the day they say they're going to show up.
Yeah.
Okay. So that's a perception problem. You got to counter that perception problem by solving. You got to solve that problem. But so you identify the problem the customer has and doesn't want. That's the captivate, first step of the conversion formula. Second step, fascinate, which is the solution they want that they can't find. Third, now that you've captivated and fascinated them, by the way, that's the position of market dominance, problem solution. You now have a little time to educate them on why your solution is superior to the competition. And then the fourth step is hitting them with a compelling offer, an offer so compelling that they can't say no. And earlier I gave you those 5 components of what makes up a compelling offer. So you have captivate, fascinate, educate, close. That's the conversion formula. The first 2 steps, captivate, fascinate, that's your position of market dominance.
Love it. Thank you. Let's apply this a little bit to real estate and property management, because many of our listeners own property management companies or real estate businesses or real estate in general. What financial mistakes do you see, or have you seen companies like ours or our listeners making that limit their profitability?
The proper incentives to brokers, I've seen as an impediment. You know, there's ways to provide incentive to brokers and then to bonus them on the overall profitability of the company. And that way we know that the profits are in the bank versus trying to increase commission rates and those types of things. So that's one thing. That's one thing that I've seen. And so managing the cost of a real estate sale has been a challenge, I think, for a lot of realtors. The other thing is I've seen the most successful realtors niche out. Divorced women, certain town expertise in towns, specific towns, working with $1 million or more net worth, but I just see more success with those particular situations niching out. In terms of property management, I have not had. I'm actually prospecting very heavily with a property management company right now, but I have not got. I don't have any real life experience with property management. I do with real estate and real estate brokerages, but not property management. So it's kind of an area I'm not as familiar with. But I know one thing.
We'll have to do an episode 2 after you land that client.
All right, good idea. Yeah, I mean, but I'm betting this that the customer has a problem that they don't want that needs to be solved. That's what I'd be betting.
Typically,
yeah.
Looking ahead a little bit, a lot of AI, automation, economic uncertainty changing how businesses operate. What financial habits will separate the companies that thrive over the next decade from those that struggle?
Know your numbers. But one thing good about a CFO is that we're able to tell you the story that your financial statements are telling you. And I think that to understand that story is a critical financial component to scale and to break through, so to speak. So I think, and know your vital 5, but know the story your financial statements are telling you. Because if just know the story, you don't have to read the numbers. Just find somebody to tell you the story, and then you'll be fine, and you'll be able to take that information and utilize that in making the decisions that are going to help you scale.
Nice. This is something new that I only started doing the last episode, and I'd like to continue doing it. But it's a little lightning round. I'm just going to spit off some questions, and if you could answer them, really just with a quick sentence, that'd be awesome. What's the biggest myth about growing a business?
That it's easy.
True. Revenue or profit?
Profit.
Debt, is it a tool or a trap?
Tool.
One book that every entrepreneur should read.
Oh God, what's the name of it? Darren Hardy wrote it. The Compound Effect.
Awesome. Love that book. One KPI every CEO should know by heart.
Gross profit margin.
Best investment you've ever made.
Ski Town, USA.
Biggest financial mistake business owners can make.
Not knowing their numbers.
Awesome. Now, one little last question here is that, I'll preface this. You've experienced both, building multi-million-dollar company and watching, another business fail. If you could sit down with every entrepreneur exactly 1 year before their business got into serious trouble, what would the warning signs you'd tell them to never ignore?
Cash flow.
Cash flow.
Understanding your cash flow, understanding the timing of your cash receipts against the timing of your disbursements.
Yeah, love it. Michael, awesome. This has been extremely informative. Thank you for educating me, educating our investors, our listeners, and our audience. I really appreciate your time today. Anything else you'd leave us with our listeners or me with?
Yes, don't keep doing what your competition is doing.
Love that. Yeah. Thank you, Michael. Appreciate it.
Appreciate it. Thank you. A lot of fun. Thank you, Yoni.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.